this opportunity in order to show you guys how to properly do the top-down analysis on gold, then how to spot your areas of liquidity in the market, which is pretty easy. So if you look at the previous price reactions we have here in the market, we mainly focus on the 15 minutes time frame, which is the lower time frame price behavior. But then for you to be able to get the overall market structure, you must start with the higher time frame, probably your weekly time frame or the daily time frame as well. So we're gonna use a previous okay, let me use forex.com. Use this to do the top-down analysis, so you guys will see how it's being done. So I'm gonna wipe out all this thing. This is basically my setup for the week, but I'm gonna wipe it off. So we'll be looking at the major key levels here on the higher time frame, which is the external liquidity. So when we talk about the market structure, we're basically talking about the behavior and the current flow of the market price from one turning point to another, in order to create the major key levels in the market from maybe the previous areas of liquidity, which is our major support and resistance levels in the market. But then for you to be able to mark your major key levels, you have to look at the price reactions on the higher time frame, maybe the weekly time frame or the monthly time frame, even the daily time frame as well. So but we have to start with the weekly, then we go down to the daily time frame, so you see the price reactions there as well. So I'm just marking the previous highs and lows, which is our external liquidities. So we're now on the daily time frame. So if you look at the daily time frame, you see we almost have the same market structure, So the real deal is how to be able to spot those internal liquidity when you dive down to the lower time frame. That's why most times when I'm trying to trade, I only mark the major key levels on the higher time frame, then dive down to the lower time frame, like the 15 minutes time frame, for you to be able to spot the major key levels and all that. So you see over here now, you can see the price reaction here. We're able to drive all these key level from the higher time frame. Take note, I already wiped the previous data there, so we just have this current data based on the market structures we have on the higher time frame. So you need to understand that the major key levels in the market will help to like understand the liquidity must be filled in order to fulfill the order of price delivery. Don't just take your trade from the major support and resistance. You must wait for that price reactions to take place. So this weekend we are looking towards 4700. If we see a break of structure from this our previous high, then we now have more liquidity grab in order to push the price towards 4700. Possibly need to see the price expansion this week. So the most important thing is you understanding the liquidity concept, which is how to mark your major key levels. How does the internal liquidity work with the price action? How does the external liquidity work with the price action? So liquidity is what runs the market. You need to have that in mind. Liquidity is what runs the financial market. So without you understanding that aspect of price reaction in the market, it's going to be difficult. That's why I only focus on the major buy setups in the market. I only go for high probability setups because the major areas of liquidity in the market are just the basic equal highs and low. Your relative equal highs and lows in the market. So once you're able to understand this market structure, it's going to be very easier for you. The only thing is, how do you identify the areas of liquidity in the market? So you need to have in mind that the major key levels are the high probability liquidity zones, in the market where price have reacted multiple times, just like your basic support and resistance. So most times you see all these structures. If you go down to the 15 minutes time frame, you see the same thing. So it's all about the market structure, not chart patterns. Once you understand this concept, the whole thing will be easier for you. So we used to, mention the basic support and resistance level in the market, but how does the price reaction take place in order to make it a major key level? That's what you should know. There must be price displacement on the lower time frame, and if you're looking at the higher time frame, maybe the 2-hour time frame or the 4-hour time frame, even the 1-hour time frame, most times you will not be able to capture those liquidity sweep. You won't know when the displacement is going to take place. It's very easy. You just need to focus on the body of the daily candles. Just use the market structures to mark your external liquidity. Then when you go down to the lower time frame, you wait for the price displacement for you to execute your trade. It's very easy that way. You don't have to stress about it. So I just want to use this opportunity to show you guys how it's been done. And if you look over here, you see I have the same market structure, and that is what I have been trading for the past 3 years now. So yeah, guys, you just need to understand that liquidity is the major thing that launches the market. So once you keep see the whole thing will get easier along the line. So guys, don't forget to comment, like and subscribe. See you in the next one. Thank you.